Tom, good to see you. Today we are talking through inheriting a Roth IRA. There's so much to know. We're going to break it all down. A Roth IRA, of course, allows for retirement, for you to save for retirement with after tax dollars. That means you pay taxes on your contributions now, but your withdrawals are tax free in retirement. So, what are the benefits of inheriting a Roth IRA?
Well, the main benefit is you continue with that tax-free uh, distribution, the tax-free deferred growth while it's still in the inherited Roth account. So all that tax-free benefit that the person that left that to you, you get to continue, obviously until that account has to be drained.
hmm So, the one thing which is very complicated that we need to break down is the 10-year rule with these inherited IRAs, which all comes down to beneficiary type. What do we need to know?
So there are three beneficiary types. There's the eligible designated beneficiary, the designated beneficiary, the non-designated beneficiary. Very quickly, the eligible designated beneficiary most often is the spouse.
Yeah.
Okay. Let's go take one quick step back. A designated beneficiary is somebody that you name as as a beneficiary on your beneficiary form.
hmm
Uh, a designated beneficiary will also have a pulse and a birth date in most cases. Okay. So your spouse, typically a minor child of the decedent until that child reaches age of maturity, someone who's disabled, someone who may be chronically ill, someone who's no more than 10 years younger. And then there are certain trusts for each of those categories. But those are the typical eligible designated beneficiaries.
Okay. So, this to me is the sticking point. There's this 10-year rule for most people, essentially non-spouses, where they have to drain this account within 10 years. But
Right.
if I'm not paying taxes on those withdrawals and it's not affecting my income taxes, why do I care? What's the big deal?
Well, the big deal is obviously the longer that money stays in that tax-free account, you're getting tax-free growth and tax-free compounding interest. So you can continue to grow that account over those 10 years and reap the tax-free benefits of something like that. Now,
Mhm.
again, tax planning comes into issue about when and how to take distributions and how much. Um, but again, why kill the goose that lays the golden egg for you every year?
Uncle Sam wants that goose too.
Of course, that's why they implemented that 10-year plan for you.
Mhm, mhm. So you touched on this already, but let's walk through some considerations for anybody who is inheriting a Roth IRA. And the first one is you need to understand what kind of beneficiary you are.
Absolutely. Again, there's different rules for different beneficiaries, right? A spouse gets to roll over that account. Then there's a 5-year distribution rule, a 10-year distribution rule, so on and so forth. So it's not as simple and straightforward as a lot of people think it is. So you always need to seek your professional help.
Mhm. And then second, you touched on this, consider your tax situation. But again, explain why this is important if these distributions are not affecting our income taxes.
Yeah, so everybody's situation again is different about where their retirement distributions are coming from. So there may be times where you may want to take some taxable and some non-taxable or tax-free distributions to take advantage of the different of the tax code and the tax brackets. Obviously, we always want to pay the least amount of tax that we have to. But if you're in a very low tax bracket with your qualified money or your taxable dollars, why not take as much of that as you can and take advantage of that low tax bracket and allow your tax-free stuff to continue to grow and compound?
I
So
see.
it's something that we work with our clients on a year-by-year basis to make sure we're being as efficient with that as possible.
Right. Third here, invest the money wisely. Always sage advice.
Yeah, I think that's pretty simple and and makes sense for everybody. Why would you want to invest your money, especially tax-free money, unwisely, right?
Mhm.
So again, you want to take a look at your overall picture, but maybe you want to take your tax-free money and invest that in something that's maybe more income producing because an income producing assets may put you in a higher tax bracket versus say a capital gains situation.
Mm.
So again, every situation is different. Everybody's
course.
tax return is different. So everybody needs to seek their financial advisor, their tax professional, their maybe even legal advisor in order to make sure that this is all done correctly.
Yeah, you're jumping a little bit ahead of me there, but
I know,
exactly.
I'm sorry. That was
No,
from
no, it's
that's
okay.
because of
These are
our
your
practice.
lists, so it's okay. I'm following you, Tom, but this is very complicated. Clearly a
Yeah,
lot of variables here.
right. Absolutely. There's many, many pieces to this pie. And so you just have to make sure that all those points of that pie are touching together and make sure that it is a complete pie for you.
Mhm. So, Tom, if somebody is going to be inheriting a Roth IRA and they have questions, what's the best way to reach you?
Either call 973-394-0623. Even though we moved our office, our phone number has stayed the same, as has our email address, tjoconnell@internationalfinancial.com.
All right. Tom, thank you.
Thanks as always, Erin.